Hey, what's going on, guys? This is Sam Kwok here, one of the Kwok Brothers. Now, as you guys know, for many months, Congress and Brandon has been trying to pass this $3.5 trillion Social and Climate Reform Act, also known as Build Back Better Back Build Act, I think, which apparently now has shrunk to $2 trillion, which still doesn't make it any better as far as the amount of money we've been spending with the government. I mean, honestly, between last year and this year alone, we spent trillions of dollars on stimulus packages, social reform programs, as well as loans for businesses, and we have never printed this amount of money in the history of the United States. In fact, if you look at the Federal Reserve data between 1975 to 2021, 35% of all new money supply has been introduced in the last 2 years alone. So we're all here thinking, how in the world is the government ever going to pay for all this? I mean, they just raised the debt ceiling, which means that they're gonna spend more money in the near future. Hey everybody, look, I'm the government. I'm spending a lot of money on nothing. Of course, the government has a plan for all this, and that's called taxing the crap out of people. The $2 trillion proposal also includes a revenue plan, or basically a tax plan for the government, and supposedly it's designed to only tax the rich. But is it though? You see, one study done by Tax Foundation has found that it could potentially increase taxes on all taxpayers, not just the rich, not just the ones that are making $400,000 or more. This has the potential to increase taxes on almost all taxpayers across the board, across the country. So you might be sitting here thinking, well, who cares? I mean, this is only for the tax for the rich people. I don't make $400,000. I'm not a millionaire or billionaire. Why should I care? Well, it turns out that no one's really safe. And we'll dissect into exactly why your taxes may go up, even though the tax proposal is supposedly for the rich. So if you're not a no one, then you probably should be paying attention to what I'm saying here. So let's start with highlighting some of the big tax proposals that I think has the biggest impact in the economy and, of course, you. And of course, I'll go and give you my opinion and perspective as to how this is going to increase taxes on everybody. And I do see the potential of this proposal. If it does get passed, it could have a pretty big impact on not only crashing the market, but really hampering all investment opportunity for the next 5 to 10 years. Now, we already talked about how this proposal is going to change rules and tax laws with retirement plans. So if you guys want to see that video is down below, or it's up there, check it out, click on it. If you guys want to see how this proposal is going to change your retirement money and why Brandon wants your retirement money in the first place. Now, we'll be going through this rapid fire, and pretty much throughout the way, I'll give you any kind of analysis as needed. Now, the first proposal is that it's going to raise the top individual income tax rate to 39.6% if you make more than $400,000 as an individual or $450,000 as a married or joint file. Now, the second thing kind of related to that is that if your IRA or your self-directed retirement account or any of your retirement account exceeds $10 million, will be taxed just like an ordinary income. Number two, the proposal also includes a top capital gains tax rate to go from 20% to 25%, and this is, again, only applies to individuals that are making $400,000 as a single filer or $450,000 as joint filer. Now, rolling over to number three is that the 3.8% net investment income tax is now going to expand into applying on active business incomes that have investments. So let's say you have an LLC, S corporation, or a partnership that's in an investment business like crypto mining, real estate, trading stocks. If you're making more than $200,000 as a single filer or $250,000 as married or joint filer, then you're gonna have to pay an additional 3.8% tax on those investment income. So not only do you have to pay the ordinary tax as one of the highest tax rates for that bracket, you also have to pay an additional 3.8% tax on your investment income as well. So obviously the thought process is, well, if you're already making that money, might as well you pay a little bit more taxes because you really don't need to make more money. I don't know what you guys think. Go and leave your comments down below because honestly, you should probably be rewarded for making better investment decisions, not to get punished for it. Number four is the return of a progressive tax rate for corporate tax. Now, right now, the corporate income tax is at 21%. Now, the proposal demands that it goes up to 26.5% if the corporation income is over $5 million. Now, prior to 2017's tax changes, the corporate tax rate was at 35%. Now, after 2017 and 2018, that tax rate went from 35 to 21%, which attracted a lot of companies to come back to the United States, which has a very favorable tax rate. Now, what this does is it increases the tax rates again to 26% for companies making more than $5 million, which could disincentivize a lot of these large companies right now here in the US enjoying a very low tax rate, which ultimately could potentially take those jobs out of the countries to some of these other countries as well. well. Now, the last thing I want to highlight is probably the biggest shocker, and it's the latest change that's coming down the road, and that is the idea of taxing unrealized gains for billionaires. Now, for those who don't know what unrealized gain is, let's say you bought a piece of stock for $100, and by next year, the same piece of stock goes up to $150. Now, of course, there's a $50 difference there in which the stock is worth $50 more, which means that you have an unrealized gain if you don't choose to sell it. Now, with the current tax law, the moment you sell it, you do have to pay capital gains taxes on that $50. No taxes paid if you keep it and don't sell it. Now, of course, to make this happen, there has to be a transition from the current system to the new for the billionaires or for individuals making $100 million for 3 consecutive years in a row. Now, what's crazy is that one senator pitched the idea where if someone started a company and it's now worth $50 billion, they're asking for a tax on that entire $50 billion growth and its unrealized gain. So can you imagine if you're the next Mark Zuckerberg and you found a great idea, great business, and you grow it to $50 billion, and all of a sudden the government says, you know what, you're gonna have to pay a tax on that entire $50 billion. It's not income. In theory, you can literally own a $50 billion company and make zero money from the company. Wow, it really sounds like the government is turning into Tony Soprano. Oh my God. Oh. You all right? Where's my money? Now, of course, the only time you don't have to pay any taxes is if your asset doesn't grow or, of course, you lose money. So it sounds like to me, the only time you get penalized with taxes is if you make money. In other words, you actually get punished for making good investment decisions. So a lot of things I've highlighted so far only looks like it applies to individuals making at least $400,000 a year, right? But here's the thing. Now, a recent research done by Tax Foundation on the impact of this proposal on the economy as well as taxes show that almost all taxpayers will pay more taxes after the year of 2025. Now, it does show initially for the first 2 years, a lot of people will get a tax cut mainly because of the expanded child tax credit. But fast forward to 2025 and beyond, it looks like almost all taxpayers will at least pay $1,000 more on their taxes every single year thereon until 2030. But you know something? Isn't it ironic that we'll see tax increases on all taxpayers only after the fact that the current president has left the office? And according to the same research, states like California, Texas, and Florida will see the biggest tax hike on all taxpayers across the board. So no, it's not a tax just on the billionaires and super wealthy. Over time, all of us, including you and me, are gonna pay for this no matter what happens. So all in all, the government giveth, the government taketh. Another potential thing I see here is that with this tax proposal being implemented, we're definitely gonna see stagnation of wages. What that basically means is that a lot of the corporations and big companies now have to pay even more taxes, which leaves very little resources to increase the wages as well as being able to hire more people. As companies have to pay more taxes, less dollars can go in investment, which means less money for payroll and wages overall to hire people for those investments to work, which ultimately also translates to loss of jobs as well. Now, along with stagnation of wages, we could potentially also see loss of jobs as well, with big companies either moving out of the country to avoid taxes, or they just don't have enough investment capital to be able to hire more people, to grow their companies, to grow their businesses, and to be able to serve more people. Now, as you guys know, I spent hours of research on these videos. Literally, I spent 2 weeks trying to figure this out. And according to the Tax Foundation's analysis on the overall impact on the economy, it looks like we're definitely gonna see some loss in full-time equivalent jobs. Now, Tax Foundation calculates a net loss of $165,000. But when you look at the chart that I'm gonna show you right now, if you take out the $68,000 job that accounts for tax enforcement, which I don't think it counts, therefore the true net loss for the full-time equivalent jobs is more like 233,000 jobs we're gonna lose in the next 10 years. I mean, I can't believe they even counted the 68,000 jobs created for the IRS to enforce tax laws. I mean, that shouldn't count. Now, honestly, guys, if you were to ask me that question, I think we might actually see a bigger number than just the 233,000. Because if you think about it, the upward pressure of inflation is making it harder for companies to acquire goods and raw materials to manufacture and produce their services and goods in the first place. So as inflation goes up, cost of goods go up, labor goes up, and also with taxes going up on companies and corporations, well, obviously, we're gonna see less jobs being created, and it's gonna be a lot harder for companies to justify, having extra people around when they can probably figure out how to get the job done by less people and less employees being worked in the company. And to circle back, this is gonna hurt the government even more because there are less people working, less jobs, which means the tax pool is gonna get smaller and smaller. What you really want in an ideal situation is that you want a lot of people employed, a lot of people working, paying the taxes, and thus increasing the tax pool, which means that you have more people paying taxes overall, although the tax rate might be at a less amount. So honestly, not only does this hurt the government, this hurts the jobs, it hurts you, It hurts a lot of the companies that are out there. Who's the ultimate benefactor? Who's ultimately benefiting from this? I mean, it's not the government, it's not the people. I mean, everyone's losing. And if you think that wasn't enough, this proposal definitely has the potential of crashing the markets. Not only stocks, but also real estate market as well. First, it definitely has the potential of crashing the traditional stocks, bonds, and mutual funds market. I mean, guys, think about it. Once this proposal does go through and we start to tax unrealized gains on the billionaires, what are they gonna do? Well, they're probably going to start selling their stocks, bonds, and mutual funds just so they can pay the taxes, and there's almost no incentive for them to keep it and grow it, so they're going to probably sell, which means that we're going to introduce a lot of supply of investments and assets back into the market, which either has a potential of price correcting or completely destabilizing the market where we would see a crash in prices of stocks and bonds and mutual funds. And because these billionaires hold on to these stocks and bonds and mutual funds at a huge scale, them doing anything like selling all their portfolio will have a ripple effect on your investment portfolio as well. So guys, all in all, no one is safe. This will definitely impact your investment portfolio, your retirement plans, and I mean, will it hurt the billionaires? Sure. I mean, they're gonna have to sell and pay a little bit of taxes, but ultimately, guys, for us little guys and middle class people, it's definitely gonna hurt us, not to mention all the proposals that I talked about in my other video about how this is going to affect your retirement. And guys, even real estate, which is my bread and butter, could potentially see a meltdown in the market because a lot of the proposal is very similar to some of the proposals that we've seen back in 1986 with the Tax Reform Act. Now, back in 1986, the Tax Reform Act not only increased capital gains taxes on long-term holdings, but also limited a lot of the business deduction related to real estate investing. Now, following the tax rule changes in 1986, what ended up happening is that millions of landlords either had to A, increase the rent rates to cover the costs and pass it along to their tenants, or B, just simply threw up their hands and gave up and surrendered the property back to the Savings and Loan Association. That ultimately led to the 1990 to 1991 Savings and Loan Crisis recession, which Savings and Loan Association no longer exists anymore. It's basically the mortgage-backed security world. So that made a lot of policymakers rethink about this whole idea of increasing capital gains, as well as limiting a lot of the business deductions for real estate specifically. Now, if you look at the proposal that's on the table right now, the $2 trillion proposal, there are a lot of similarities as far as the proposals from 1986 to what we're looking at right now. Under the current proposal on the table, the taxation of real estate operating profit will soar from 29.6% to as high as 46.4% with no business deduction. Youch. And real estate capital gains will soar from 20% to 31.8%. So if you heard me correctly, not only does this increase taxes on business income, capital gains, but also limits the tax deductions that one company can make for their real estate operations. But on the flip side, I do have another school of thought to which I don't think real estate market will crash anytime soon in the next 10 years, and I'll definitely have another video to talk about it and explain exactly what it is. So definitely subscribe to our channel if you want to hear why I don't think the real estate market's gonna crash anytime soon, and especially not for the top 1%. It's designed to slowly creep up over time to where after 2025, according to Tax Foundation, you're gonna end up paying way more taxes pretty much from there and on, and there's no going back. Let's be honest, it's designed to destroy your retirement, destroy companies, and destroy your investments. So guys, didn't we learn after trillions of dollars of stimulus that we printed, it led to what is pretty much now? And if you think inflation is bad after trillions of dollars spending on stimulus packages and loans, well, wait until this proposal goes through. Yeah, it's gonna definitely hurt and sting later down the road. So guys, let's not make the same mistake. This $2 trillion Build Better Nothing Act is nothing but to make the government bigger, to take more control, to create more revenue, to tax you more, to rob you of your freedom. So that being said, guys, we'll pay attention to exactly what's happening, what changes are coming, whether this proposal actually has a shot or not, we don't know. So definitely subscribe to our channel if you want the latest updates about what's happening. We talk about real estate news, economy, and of course, any changes to the laws that could definitely hinder our freedom to grow, to build our investments, to become financially free. So that being said, guys, love you, appreciate you. I'll see you in the next video.